So this is Arkapital Financial Insurance Services. Okay, so what are we about? We're committed to change the financial services, the industry by breaking the industry norms, create an impact, and build generational wealth. Our focus is to provide financial education and security to our clients, agents, and communities. Okay, so there's a lot of different things that I show individuals. Number one is most people are used to having money in their bank account. That's 98% of individuals. The other 2% is the small percentage of individuals that utilize what we call stocks, bonds, mutual funds, real estate, etc. Now, the biggest thing that is affecting both is inflation, right? So the number one thing we need to understand as middle-class Americans is if all our money is in the bank account, our money is being destroyed by inflation. Why? Because look at the interest rates, and these are good interest rates. Normally it's worse. So what's the key? We got to educate ourselves. We got to make sure that we put some of our money in a place that it could earn interest. Not all of it, but we need to have some, because if we don't, our time is going to go by and our money's only going to die, right? That's what I tell people. Now, what is the money blueprint that you have when it comes to your life, right? There's three things. There's what you believe in, right? Some people say, I believe that, you know what, the money is only for wicked people, right? Or you got to do bad things to make money. I grew up in a border town where only people that had money were drug dealers, right? So that's your belief. So what do you believe about money? Number one. Number two is, what's your identity, right? What do you think you deserve? Do you think you deserve abundance, a lot of money, a little money? What do you think? What is your identity? Number three is, what are your money habits? It's so crucial for us to understand, what are your money habits? So what are our services here, right? As we're getting to understand and help you identify what we can do for you, we want to go through this with you. Number one is qualified and non-qualified plans, right? If you have a 401k, a 403b, 457, any type of retirement plan that you have from your job that you need to roll over, we can roll it over for you or start something from scratch. Number two is life insurance. Life insurance is vast. There's so many type of products. And my goal is identify if you need only life insurance or if you need living insurance. Life insurance, you don't have to die to use. Number three is strategies for business. So this is things that we strategize for business owners to find benefit plans, pension plans, etc. And how can we eliminate debt? Why do we want to eliminate debt? We want to eliminate debt so we can have more money to put towards our future and our retirement. So who do we work with, guys? This is Arkapital, and these are all the top companies we work with. Now, the reason why we have so many, and these are only the primary, is because it depends on the state, it depends on your health scenario, it depends on your age, it depends on the risk you're willing to take. We go out there and find the right retirement plan for you. We go out there and find the right insurance for you, but it all depends on those four factors: state you're in, health, age, and risk tolerance. Now, what do we do, right? What are we doing, Viridiana, Cristina, Vanessa, Luis, right? What are we doing? Number one is, these are 4 steps that we want to implement. Number one is risk management, right? How do we properly protect you, your family? Life insurance, disability, long-term care, health insurance, proper protection. What do we have to do? The reason why we put number one as the foundation, Viridiana, is because the number one reason why people go into bankruptcy is because of health problems. So it's so crucial for us to make sure we create the foundation strong. 2, how do we organize our finances better? Do we put a budget in place, an emergency fund? How do we repair our credit? How do we create a way for us to get debt free faster? Number 3 is asset growth. How do we diversify, right? How do our real estate can grow, right? How can we earn compound interest? And what are index strategies? How should I be investing when it comes to our future? Now, guys, in TikTok, Instagram, we have all these gurus, right? But nobody goes for the fundamentals. What are the fundamentals? What should I lock in first? Number 4, how do we protect everything we've built? Right? How do I minimize taxation? How do I strategize for retirement? And how do I properly protect my estate plan? Do I need a will? Do I need a living trust? Is it irrevocable, a revocable? What do we need? So these are the 4 steps to make sure that you have your financial house in order. Now, the other day we brought a crypto specialist because now people are asking about crypto, right? So if we're planning on bringing real estate individuals, stock individuals, people that can break this information down because that's what people want, okay? Now, risk management, and I love to just go through this because it's so crucial. We're in the business of mitigating risk. Number 1 risk is life insurance. Number 2 risk is disability and health, right? Proper protection. And the 4th risk is how is your coverage when it comes to your auto, your home, and your business. Now, let's talk about life insurance, guys. We have 2 types of coverages, term or permanent. Term is like renting or renting an apartment. Permanent is buying a home. Why do we want to buy a home? Because it has equity, it has way more value than just renting. Now, is it okay to rent if you can't buy? Of course. When do you buy a home, Veridiana? When you're ready, right? Sometimes you got to get your credit right. Sometimes you got to have some savings. Sometimes you just got to get ready for buying a home. So those are the 2 options. Now, mortgage protection, right? And this is something that's very simple when we talk about planning, right? Most people that we're helping have a home. So what does the mortgage protection do for you and your home? Number 1, protect your family, protect your home equity, protect your income, protect your growth of wealth, and keep your family in the home after a death. Now, guys, by this time people are asking how much insurance do I need? Right? This is something that is simple that we call the DIME method. The D stands for debt. How much do I owe? Do I want to pay my debt to be paid off? Number 2, income replacement. How much income my family needs to maintain the lifestyle they have today? Mortgage, do I want my mortgage to be paid off? Yes or no? Education, would I like to provide my children some education if I'm gone? That's how we calculate the necessary life insurance. Now I'm going through this, guys, because I'm going to send you this presentations because sometimes a lot of the questions that I get asked, the answers are in the presentation. Now, sometimes because of time frame before when we would present in home, we would go through all of this. Now, sometimes I do 2 slides, right? J-Lo, sometimes I do it in 20, 30 minutes and I'm done because I need to just capitalize on attention. But for you guys, you need to know to which slide to go to answer the question for the client. So asset protection, right? Are you properly protected when it comes to your home, auto, business? This is important. Why? So Cristina, right? J-Lo, if you get in a car crash, so for me, I just got in a car crash 2 weeks ago when I was in San Diego. And if the individual says, hey, Isaac has a home and he has equity, if he goes and Googles, he might say, you know what? I'm going to say I'm more hurt than what I am so that I can go over and take his assets. Because if I'm not properly protected in my car, right? And I'm 100, 300, 100. My wife knows this game, so I kind of know a little bit about car insurance. I know that for bodily injury, it's 100,000. But if that guy says, hey, you know what? No, a lot of more things are bad with me and I lose, what's going to happen? They're going to come and take my home equity also. Right? Or if someone falls in my house and the danger, the scenario is way more expensive than what my home insurance can pay, they can sue me and take my house. So it's very important for us to talk to our agent and know whether we need the proper home insurance, the proper car insurance, because when our clients are out there driving, they don't know that their equity in their house and their whole livelihood is at stake if they crash with the wrong person. Right? So it's very important for us to tell this to the clients. Cash flow management, simple budget, create an emergency fund, let's pay some debt, and let's repair the credit. Now, asset growth, right? We have what we call index strategies, compound interest, and example of savings. So let me share that with you guys. What is an index strategy? So here, I don't know if you can, I'm trying to zoom, but I don't know how to. What you can see here is below, you can see there's $100,000 an account with the market directly in index strategy. And what you can see is that from 2005 to 2019, the index account, the account in the market is at 206 and the index strategy is at 224 with none of the risks. So if you see here in 2005, the S&P did 3%, you get 3%. The 2006, the S&P does 13, you get 975. That's the most that you're going to make. But in 2008, the market does negative 38%. And what happens there? You don't lose a single penny because of the strategy. What the strategy is saying, Viridiana, the max interest you can earn is 9.75, but because that's your ceiling, we're going to also give you a floor of 0. So in this case, long-term, the strategy is giving a healthy interest with none of the risk. And that's what we want when it comes to our retirement accounts. What we want for our retirement accounts is we want to make sure that we can earn some interest with no risk. Right now, we're rolling over almost $400,000 in the next couple of days because of all these people that don't want risk. This is important. This is the power of index strategies. Now, so crucial for us to understand what interest is. Sometimes we don't know what is a good interest. So sometimes if the bank says we're going to give you a 1%, you're happy because you don't know if the 1% is good or if it's bad. So this is the rule of 72. This is what we call the 8 wonders of the world, right? So here we have a 29-year-old. He has $10,000. He's earning 4%. We have another 29-year-old, same $10,000, he earns 6%. Now we have another 29-year-old, the third one, earning 8%, the same $10,000. And then the last 29-year-old with 12% per year at $10,000. From 4% to 12%, we don't feel like it's a big difference, right, guys? But at 65, Viridiana, because you made the face, right? At 65, 4%, how much is your $10,000 worth?
40. So it quadruple.
40,000.
Obviously.
It did more than quadruple because
I mean, it, between the 4% and 12%, that's a world of difference on the balance.
from
At the end,
40,000,
it balance, yes.
it's just a difference of 600,000. It's just a difference of 600,000. A small difference. So this is what clients need to see. They don't know that a 9.75% could be the whole difference because they might say, oh, I'm capped at 9.75. Well, your $10,000 could turn into 160. And if you can earn some 12%, it could even be more. So this is the power of compound interest. Now, something to ask our clients. Most of the time, our clients only know interest when we're paying it, right? And this is a great story to tell. I used to have an uncle, we used to have a barbecue and the carne asadas, and all of a sudden he would always say, Mijo, look at the house. I'm paying 4% interest. It's a good interest. Mijo, look at my truck. I'm paying 6%, where normally everybody pays 7, 8, 9%. Mijo, my credit cards, I'm paying only 10%. But the question is, Tio, where are you earning interest? Oh, how do you do that? We don't know. All right. So these are questions and stories to tell. Now, wealth preservation and distribution, right? There's 3 components to this. Taxes, retirement, and estate planning. These 3 things is important for us to communicate with our clients. Now, when it comes to retirement accounts, this is very, very important. It doesn't matter where you're at, if you're in California, Arizona, Texas, Utah, Nevada, Florida, wherever, whatever state you're in, your money, right? And whoever you're sitting with, their money is going to be in 3 places. And crypto is also involved in this. Even if you don't think so, crypto is involved into this. Taxable, tax deferred, and tax free. Your money is going to be somewhere. Now, the real question is, where is the most of your money, where is it at? Taxable or tax deferred? Most people know that. Most people know savings, cash, checking, etc. Most people know 401ks, IRAs, and annuity. But the reality of the matter is people don't know where to get tax-free, tax-exempt accounts. So our job is to let them know, right? What is the biggest difference between taxable money? Tax now means it's going to continue to get taxed. The more you make, the more you pay. That's a bucket that is going to continue to be getting drained. The more money you make, the more you're going to pay. Tax deferred, what this means, guys, is if you have $1 million there, you're going to pay taxes later. When taxes are up or down? What do you guys believe? Do you guys think taxes are going to be lower in the future? No. And this is ordinary income, meaning whatever income bracket you're in when you retire, that's where you're going to pay taxes at. And number 4, tax-free. Why not use IRS code, in this case 7702 code? Sometimes people trust in their 401k because it's a code. It sounds powerful, right? You tell them there's a 7702 code also that you can use for your advantage, right? Where the money can grow tax-free and come out tax-free. That's crucial. Now, when it comes to retirement planning, right? We had a client that put in here $350,000, right? And this account, he put in here $350,000. And by 66, if he wanted to start pulling out income, he could pull out around $33,000 per year for the rest of his life. This is important, right? Why? Because most of the time, when it comes to a retirement, if someone says, I got $350,000, what are they going to do? They're going to pull out $50,000 per year, and in 5 years, 6 years, the money's going to be gone. So what we try to do here is, how do we make sure that your money lasts? It's important. Now, guys, do you know the rule of 4%? 4%, any advisor is going to give you a 4% on your money for the rest of your life if you want your money to last you the rest of your life. So 4% on 350,000, that is literally $12,500 per year for the rest of his life. Now, this account at 55, he threw in 350K, and literally at 65, he can start pulling out 33,000, almost 34,000, almost 10% of 350,000 for the rest of his life. Double whatever any advisor would give you. That's important to know, because this is how we structure pensions for people. So this is when people say, Isaac, what is an annuity? Where can we roll our money over? This is how this works, right? You put money and you get money for the rest of your life. Because right now, we don't have an issue of people dying too soon. We have an issue of people dying too long. People living longer, right? People might say COVID happened. Well, yes, but still, compared to the population, we are 7 billion people, right? COVID didn't take as much people as we thought, right? Even though that's a whole nother story, right? That I don't want to go into. But what I'm trying to tell you guys is, if Social Security bumped up from 65 to 67 is because of something. If they're bumping up the retirement ages, is because of something, because we're living too long. And that's good, right? If you have the money to live long. Now, estate planning, right? This is very important for us to know. And this is what people want to know, right? What is a estate plan? Well, if you only have a trust, that's not a estate plan. If you only have a will, that's not a estate plan. If you only have a medical directive, that's not a estate plan. Estate plan is literally a plan. Something that has a will inside of it, living trust inside of it, a medical directive, healthcare directive, financial directive. We need to make sure that in any scenario, something happens to you, your family and your estate is protected from the state. And everything we do, we literally put it inside of what we call a generational vault, right? Instead of this generational vault, we put in forms, paperwork, illustrations, life insurance policies, pension strategies, is a will, a trust, everything is in one place at one time, so that if something happens to you, your kids can have a user and password and go and get access to that. Because at the end of the day, most of the time, when we need something, we can't find that paperwork, right? Everybody goes to the class and we can't find that. So let me share my screen again. From here, the reality of the matter, the number one thing that you need, and I'm going to send you this so you can read this through. This is what I go through, guys. This is what we do. These are the steps. So what step, Viridiana, do you need help? 1, 2, 3, or 4? Isaac, I need help in 4 and 1. Perfect. Now, Viridiana, these are the companies we're working with. We're going to find the right company for you, right? But we're going to show you options. This is like when you go to TJ Maxx. You can buy Nike and you can buy Adidas, right? You can choose. From there, as we're organizing 1 and 2, if you have any questions on 2 or 3, please ask us, okay? Okay. Most of the time they're gonna maybe have a question, maybe not, but at least they know that we're here to serve them. Viridiana, what we wanna make sure we do is this. We wanna make sure that our money is in a place where it can earn interest so that we can have the most money we can in the future at the lowest amount of risk. That's what we want to make sure we do. We need to make sure we have the most amount of money in the future with the lowest amount of risk. Simple. That's where we start. Okay.